I am Araceli, a wealth advisor, real estate investor in the United States and Canada, and creator of Wealthy Women in Real Estate. Every week, I meet with Colette, a real estate broker and a real estate investor in Canada. We come together to talk about all things real estate investing and how to increase your wealth. Join us. Welcome, everyone. This is Araceli, transition wealth advisor and real estate investor in Canada and the US. And today in my chat with Colette, we have a very special guest, and we have a question that we're going to be answering. Colette, can you introduce yourself? Tell us what we're talking about and our guest as well.
Sure. I hope I can do all that. My name is Colette Rava. I'm a residential real estate broker in the GTA. I don't know if I talk too fast. Anyway, hi, everybody. Welcome to the show. We love to hear your questions. We love to have you subscribe and comment and ask us your questions, because this is why we're here to answer your questions. So today we have the lovely Lavinia, and she's a mortgage broker. She will tell you a little bit more about herself. We love Lavinia because she's very well-versed in numbers and helping people figure out what's not just what mortgage is best, but which way to borrow is the best. So she can give you advice if you need a HELOC, if you need A lender, B lender, all that stuff that is, mortgage speak. Sometimes it's overwhelming, it can be, but with Lavinia, she will help you through the process. She's very easy to talk to and ask questions. So welcome, Lavinia. And today's subject is, what's the difference between last year and this? We have so many questions, but let's just start with that.
Hi, ladies. Thank you for having me. And hi, everyone. Okay, so to start off, as we all know, mortgage rates have increased a lot, right? So to put things into perspective, if you're in a fixed rate mortgage, it's not affecting you right now until your mortgage comes up for renewal, right? If you're in a variable rate mortgage and with a variable payment, because there are lenders who have a variable rate mortgage with a or fixed payment. So if you're in a variable rate mortgage with a variable payment, then definitely you have been, your mortgage payments would have increased, right?
Yeah.
So coming to the point that you had mentioned, Colette, comparing rates today as compared to what they were last year, for example, if a client was has a mortgage for about $1 million, right?
Yes.
Rates last year were around maybe 2.5%. And so their payments last year would have been around $3,900, right?
Okay.
The same $1 million mortgage today, if a person was going to buy, if they were getting a mortgage for $1 million, with the rates today, the payment is close to around $5,700.
Right.
So a lot depends on exactly.
That is a
and
big
the
difference.
way we qualify the client as well is it's a contract rate. That's the rate that they're actually paying plus 2%.
Right.
Which
and that's
means
that's been a few years now, right? That
Yes. And so basically, because last year we would have had to qualify them, that's what we call the stress test.
Right.
Right. So
It stresses you out.
Right. So today, if a client is buying, we have to qualify them on, say, if they are the rate that they are going to pay, which we call the contract rate,
right,
is say 5.5%. We have to qualify them on a 7.5%.
Well, can I just say something as far as like history lesson here? Yes. So let's say I got my mortgage 2 years ago at 2%, and the stress test at that point was 4%. And now, let's say I'm paying 5% mortgage rate. I was, the way the bank or the way the lender assessed me was based on that 4%. So now, if I know I can't pay that 5%, that's why the market has changed, in my opinion. Very, like you'll see this in much more expensive homes where the mortgage rate obviously has put maybe the person or the family that's owning the house over the top, and they can't afford their mortgage anymore. So even though you're stressed out about this stress test, thinking, okay, like I really, I'm not sure if I can even qualify at that plus 2%. I have to make sure that I can pay it at the end of the day. So the bank is actually doing us a favor by saying,
Yes.
hey, we really want you to not default on your mortgage. We really don't want you to be homeless. We really want you to keep the home for longer term. And this is why you see the prices going down as well. That's not the only factor, but the whole reason of the whole mix of the mortgage rates going higher and the prices dropping. Technically, you can buy more house for your money today because the prices have dropped, but you're paying more right now because the mortgage rates have gone up.
Yeah.
So I have a big question for you. Should you lock into a variable mortgage or should you lock into a fixed mortgage?
Yeah, that's a question a lot of clients, a lot of people are wondering right now, because the and I think, not to sound cliche, but it would all depend on the client's individual situation, right?
Right.
Because they say the Bank of Canada is going to increase the overnight lending rate again. There is one more meeting in December of this year. There is a possibility that they can, because the intention of is to reduce inflation, to bring down inflation, right?
Right.
So if the main thing is the client's individual situation, because the main thing in a fixed mortgage is, if you break the mortgage, is the penalty,
Right.
And so if the client's intention is, or if they are going to be in the home or the property until the end of the term, at the renewal they can move to another lender without a penalty at all, right? But if they are in a fixed rate mortgage and they break the mortgage for whatever reason, and break it in terms of if they want to do a refinance and move to another lender, so those are the times when they have to pay back the mortgage, basically, right?
Of course. Well,
And then that there is a penalty that has to be paid, right? And each lender has a different way of calculating the penalty. The timing is also important. Whereas in a variable rate mortgage, what happens is it's a 3-month interest penalty, which is much, much lesser than a fixed penalty. They call it an interest rate differential, the penalty for a fixed rate mortgage.
Right.
So that would, and then the other thing is, can the client afford the changes in the payment?
Well, that's what I was going to ask you. The difference between a fixed rate and a variable rate. That's why people like a variable rate, because it's much lower in general than a fixed rate.
In general, yes.
So what do you see is usually the difference between a fixed rate and a variable right now?
Usually it is at least a 1% difference.
Okay, which is not terrible.
Yeah. But the main thing that clients are concerned, should think about is, are they going to pay back the mortgage?
Well, it's all about math, and that's where Araceli comes in, because when you say the 1% over 5 years extra versus the variable rate over the next 5 years, what does that look like? And then what happens if the rates go down and you're in a fixed rate? You're stuck with that fixed rate.
Yes, and that is what right now the rates are so high, and the other alternative is, based on where they are in their fixed or their mortgage right now. So can they lock in for, say, 1 year or a 2-year term, a shorter term, right? So that's another thing that they can think about is, can they lock in for a shorter term instead of locking in for a 5-year fixed? So you're in that high rate for the next 5 years. can you lock in for a 2-year term or a 3-year term?
That's possible
Right?
with some lenders.
That is, yeah. So
Yes.
one thing that I wanted to say here is that, Lavinia, thank you so much for the explanation. But for our viewers, because we don't know when you're going to be watching this episode, the change of rates happen at any point in time. We are doing this episode in 2022, and we have seen the lowest rates in the last few years.
At the beginning of the year.
At the beginning of the year, and even in 2020, 2021, all of those rates were very low. And now the interest rate is going up, and we don't know when that's going to end. But the point of this episode is to see that now when interests are higher, usually the properties will be lower in price. And if the interests are lower, the properties tend to be higher in price, which obviously is going to compensate. So the main point here I want to go back to is that you need to look at your current situation, because if you need to buy something or sell something, that is not going to change. So you need to see, and also the little near future. Here in Canada, we have a 3, 4, 5, I think up to 10-year closed mortgage.
Yeah, they have 1 to 5, and then a 7 and a 10-year mortgage. Those are the most.
Thank you. Right?
Yeah.
We have a term that we're going to keep the same interest for that period of time. In the States, it's a little bit different. Sometimes you can actually get a 30-year mortgage with the same rate. So it's a little bit different. But the point here is that you need to look at do a little bit of planning with your own life. Where you're going to be? Because if you have, let's say that you know that you're relocating to a different area, maybe that is not a good time to do a closed mortgage. You may want to do a variable because that's what it's going to be. And the same, if you know that you're in for the long term, then you may want to lock it in for a period of time, maybe 3 to 5 years. So that is the whole point of these. I love the way that you put that together, Lavinia. And I just want to know if do you have any other question, Colette, for Lavinia?
I just want to reiterate what Araceli said about, the difference between having a higher mortgage and having a lower price point when you buy. We still, I don't know if all of you agree, but we still think now and even next year would be a great time to buy when the prices are lower. If you can afford that mortgage monthly, know your numbers. That's ultimately the message I like to tell people.
Yeah.
As long as you're confident with your numbers, whether you lock it in or variable, but you have that, you make sure you have that income that you can pay it off. And when we say $1 million mortgage, it doesn't mean that it's $1 million house. It means $1 million mortgage. So this means that whatever you put down, you have to put down 20%, as far as I know, after $1 million. And then you obviously have to qualify for $1 million mortgage. So all these things, we just wanted to give you a rough idea on the numbers and how big things could change over the course of time that you own the house. We always want you to buy low, sell high. Obviously, sometimes it's not possible, but as long as you hold on to real estate, we believe, if I can speak for you ladies, that real estate is still a good purchase. It's still a good investment. You got to live somewhere. And if you're really lucky to have it give you a little bit of income at the same time is fantastic. That's always a win-win.
For sure.
Yeah.
And so, you see, one of the things that I was telling Lavinia actually earlier on is that when I bought my property, that was 8 years ago, not too long ago, right?
Right.
There's no way that I could buy the same house today and make it work the same way. The same, right. Lavinia, I think you bought something as well.
Yeah, a while ago. We bought something about 20, I think it was about 20 years ago. And that same property is around like 4 times. I think it was, at that time, it was about 120 or something. The same property it was a condo in the same building. I looked up the prices yesterday, was close to 700,000.
Right, exactly.
Right.
Same thing
And
with
the rates
me.
were approximately the same that we are looking at now.
Right. So that's the thing. When you look at history, so if you're asking someone, should I buy now? Should I sell now?
Yeah.
The question is, have you looked at history? Have you looked historically in the area? Have you talked to anybody about what you think the growth could be? The GTA is fantastic. I know the prices are going to go lower. I
Yeah.
don't know. Let me look at my crystal ball. But I think the prices will still drop a little bit based on all the historical data that we have and we've looked at. But also I know based on historical data that the prices will come back up. There are over 400,000 new immigrants coming into Canada
Yes.
over the
Yes.
next few years at least. So you
Yes.
know people have to buy something or they need to live somewhere.
Somewhere.
So if you can afford to buy, get your feet wet, go slow, don't overextend yourself, buy something when you can, when you're comfortable financially that you know you can do it. But ultimately, same thing with me. I bought a property 4 years ago. I had to renegotiate my mortgage 2 years ago, and I'm still comfortable. I can still afford it. I can still make sure that the properties are growing and they will once I decide to sell, which I'm never going to sell. But let's just say I have to sell, then I know I will make money. So we honestly think that real estate is always the way to go if you're smart about it and you make the right choices for your lifestyle.
Absolutely.
Yeah, and it's all about
Always,
planning, right?
Yes.
always exactly. Plan your finances, plan your lifestyle, plan to keep real estate as long as you can. That is the advice. So, Lavinia, we really appreciate you coming here today for this. This is awesome. Thank you so much. And there's below, you can find all the information to get a hold of Lavinia if you have any further questions. Thank you, Colette. Thank you,
Thanks,
Lavinia.
everybody.
Thank you so
Thanks
much
for
for
coming.
having me.
Thank you for being here on the show. Please remember to subscribe and hit the notification bell to get notified when there are more shows available. And if you would like to have more information on how to start investing in real estate, please visit my website at www.aracelihernandez.com. Thank you.